Hey, what is up, dudes and dudettes? This is Dudediligence here, and I'm actually thoroughly confused and convinced at the same time that all of the good content we make on YouTube, on Patreon, nobody reads them, nobody watches them. The only reason I'm making them is because, you know, I just like to use this as a trading journal. If you look at this video, which is posted on January 7, 2022, there's some, let's just say, very great comments where people are really cheerful and then they're very supportive on, you know, talking about, like, you know, they're all good comments. But if you go look at our MMAT video, all of these bashing comments are saying that we're just dumb. But it's okay, you know. On this video, on January 7, 2022, I talked about Nasdaq has the potential to drop under about 14,640, which right now we're way below that point now. We're at 13,768. And then if you actually go back and look my other Nasdaq video, maybe I should make a playlist. I basically highlighted where Nasdaq's gonna go around November or December when I was talking about I am looking forward or predicting or foreseeing a 20% correction. And right now we're around 15%. So if we go and look at the Nasdaq, the highest right now, see the highest point we're taking account of is 16,111, and then I've already did the calculation for you guys. My eyeball amount is like 13%, but apparently it's a 14.5% correction right here. And then if you go back and, because I don't remember which video that is, I talk about these two lines, okay? You look at these two lines on this video, you know that I drew these lines way beforehand, the blue line and the green line. And if you translate it to Weibo here, we have the blue line and green line. You see, nothing changed, okay? We had the blue line and the green line. And then I have a much more complex overlay on a Chinese software because the code base I'm very familiar with, and I'm sort of migrating it to Felicity. I'm trying to make a visualization for Felicity instead of I just type in CMD and then get this and then call up Python and everything and trying to, you know, go get a command line. I'm trying to hook a portion of Felicity onto AWS. Hopefully we get a student discount or whatever. We're master students. Hopefully I can use, you know, the title of the capstone project. I'm actually not making it to capstone project. I'm just gonna leash off of the school to sort of get a discount or get a free AWS, and you guys can use a portion of Felicity's functionality to make probability distributions and all those kind of stuff that will help you guys determine whether, you know, it's a good idea to enter the market or not, blah 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 blah. I will make another video later on to sort of teach you guys how to use that if it ever goes to that point. So right now we're at this zone, and then if you go listen to my previous video, I talk about this is it, like basically a gap zone, right? When you enter this gap zone, it's more than likely that you might have a gap down later on the week that of the Fed meeting. And I mentioned that in the very old video in December. I talked about the January Fed meeting, the FOMC meeting, is going to be the most important of all of the other meetings, because similar things happens in on the year of 2000, and then they literally just announced a very early rate hike, which not really accidentally, but basically crashed the market in a very meaningful way that not a lot of streamers or YouTubers are talking about, because, you know, most of us weren't even trading back then. I was bloody, like, I don't know, like 3 or 4 years old back then. And then I consulted a lot of old traders who's been trading for longer than I've lived, and they distinctively remember the moment of the Y2K crash. And then this has a striking resemblance of that, okay? And we all know that the next FOMC meeting is on the 26th, but rumored the bond yield rate is gonna change on the 25th. So basically, depending on what the call and put flow is and where the market direction is heading on the 24th, we might see, which is next Monday, we might see a small rebound, and most likely, most institutional believe that it's going to keep dropping in preparation for the FOMC meeting. But here's the thing. If on Wednesday, there's no bombshell drop by the Fed chair, which is Jerome Powell, or which we call them J Money, then we will see a small rebound up back to 1400. Okay, 14100. Okay, which is this line. Where did it go? So here. So basically, we're trapped into two liquidity gaps. The higher bound is 14100, and then the lower bound is actually where the green line is. Okay. And then you guys are like, but what's after the green line? Okay, so here's the thing. After the green line, you have the 1300 line. But the probability of a drastic drop to 1300 line, which is kind of low in its own merit, when it drops under the green line, it's a danger zone for a rebound because a lot of the chips, or we call leverage on the market, is already being exhausted during this huge drop down period over here. Okay, a lot of those garble stocks that people keep shorting is already reaching a point where if it keeps shorted, then they're entering a stage of reverse split, or entering a stage where delisting might happen, or entering a stage where some of you might think that the value proposition of a certain stock might reach its point. But I'm gonna give you an example of when you know that either the market, so there are two scenarios here. One is the market is going to shit, like absolutely shit. One is the market is gonna rebound, and both of them are, you have to look at Tesla. So the reason why we have to look at Tesla, because Tesla is a leading indicator of Nasdaq is gonna go. And as you all know, right? We all know. We all of us knows. Obviously, about 15 to 20% of Tesla is all retail FOMO at this point. So if we just draw it like this, so this part, all of this part, all of this part are basically inflation values. Inflation value. What does it mean is, inevitably, when Tesla stabilizes at where this line is, let's use another color, this blue line is, the market has to decide whether the entire market is going to rebound with it, or we're going to go down under. Okay, and then this line coincidentally equals about here. What was here? That's the $900 line. So the $900 line is one of the most important strike point on Tesla's option chain. And we can prove that too. I'm just too lazy to go to Tesla's option chain and tell you guys that there's the call and put distribution is actually really even. And then people using this as a safety measure, actually. So what would happen if it dropped under the 900 line? Well, there's a higher probability it's gonna rebound and test it again, right? It tests it again and then rebound a little bit, and then it's gonna keep dropping. Again, this stock, Tesla, like from 1250, I told my subscribers, and I told my Patreon member. One of my Patreon members keep asking me, what do I think about Tesla? I said 1250 is where it will reach the highest point. It's the same thing as Rivian. I predicted Rivian's highest price is 135, and then I basically just told them that you can just short whenever it reaches 135 because Rivian is extremely overvalued, and even if it becomes 60% of the original price from the highest, it's still overvalued, because I don't want to get too into specific sectors. If you guys have questions about specific sectors, I will, based on how many people like that comment or how many people actually watch this video, I might talk about specific sectors. But if you just want to predict where Nasdaq is going to go, you have to look at Tesla and have an understanding of what Tesla's real value lies. So if you go look at Tesla's balance sheet, you will know that Tesla's where the value is at $800. So you have $100. So intrinsically, $800 is where it should be at. But right now you have $143 premium. So what the market have to decide is, in the next few weeks, depending on when the Fed is going to increase the interest rate, either it's this coming Wednesday, or is it going to be the next coming Wednesday in the next month, or is it going to be in March? And we all know that it's inevitable, right? And it's 0.25%, it's inevitable. If it's 0.5, then the entire market is going to drop a little bit more. If it's 0.75, then we might see a 35% correction. But we all know that this is inevitable, and that this number actually accounted for about 12.5% of Nasdaq correction. I should probably use on. So what does it mean if you go back to look at the Nasdaq? That literally just means that the entire market right now is anticipating a higher than 0.25% interest rate hike in the coming month, in the coming 3 months, okay, the first quarter. And then because of a lot of the companies are shrinking production and they're expecting a supply shift, so in supply contraction, this is why today we see a sort of like a waning going up, but it can't, and it keeps dropping. And also we have a lot of sell volume coming in. If you guys don't know, damn, I can't use Weibo now. Can I add the volume chart? But if I'll make another video where I have the volume chart. Where the heck is the volume? Actually, you can actually look at volume chart. That's so annoying. We can look at TQQQ though. If you look at TQQ's volume chart, you will know that today's volume contraction is absolutely insane. That means the correct play by the end of the market end, which I told my Patreon members that you shouldn't make any rash decisions in the mid-market because you're just emotionally trading. Okay, there's only 2 good day trades today, and I highlighted on Patreon. One is Tesla. You can make a very quick 2-hour call that will make you actually snap money, that make you about 27%. And the other one is Netflix. You can actually buy, let me show you guys. Let's do it in the 5-minute chart. You can when it's at the lowest, when it's actually start dropping, you can buy a $400 call option, and then when it reaches $400 and just instantly exit that position, you make about 35% on premium on just this interval right here. Okay, but anyways, we don't want to talk about past trades that we've committed or whatever. We just want to talk about what's next for this coming week. So most likely on the Monday morning, it's gonna have the residual effect of the sell-off by the market end. We can actually look at it. Where is the minute chart? Absolutely sell-off, especially leverage sell-off, is huge. Okay, so that means Monday morning, we're probably gonna see a gap down. Well, depending on how the oil price actually is gonna go in a weekend. So I will give you guys an update on Sunday. Depending on how oil price goes, we might have a gap down, and then it's gonna attempting to rebound back to where today the majority value is consolidating, which is at where it's coincidentally at the blue line. Okay, that's basically what's gonna happen. And then depending on how big the call volume is coming in, and again today Tesla, Apple, Microsoft combined, we're talking about $1.2 billion on each individual big cap stocks. All of these call options got expired. So next week is a big reset week. We either prepare for a very bad Fed meeting for Wednesday. That means we'll have a small rebound on Monday, and then we're looking at basically all week red, depending on how bad the Fed meeting is. Or the Fed meeting isn't that bad and people are getting a little bit more optimistic on Monday, then we will see a mild or medium call volume coming in. We will see a mild recap, right? We probably will see a 1.2 to about 2% increase in the Nasdaq at some point on Monday if the call volume is great. But most likely it's not going to happen like that because people are betting really huge on SQQQ and UVXY right now. And then if you look at the monthly Nasdaq options, it's a little bit iffy right now. So generally speaking, what you should do, and again, we're not financial advisors, we do not give financial advices, okay? I don't want to make this video way too long because I know none of you is going to look at it anyways. What you guys can do Monday morning, if you don't have SQQQ calls or didn't get into SQQQ, what you can do is you can look at what are some of you can trim your portfolio to an extent where what do you think what stock do you think is already at a value that you think is fair that you can start buying back, right? Then you can start making a small position using your dry powder that I told you to preserve when the market is at this point, okay? When market is 15,700 or something like that. Or over here, you have when you have little dry powder here, you can start buying back just a small position, like maybe 2% or 5%, depending on which sector do you think is most likely to preserve its value, or most likely the value already got exhausted, right? Some of you might think, Carnival Cruise might be a good idea. I actually would just think all the bank stock would be a good idea to buy back in at this point, especially you're anticipating a rate hike. Actually, trim your portfolio, dump all the garbles, okay? Because we all know that the garble stock is not going to go to anywhere, because the true value, their true value and their anticipated value is way too high up, and then all of your FOMO, you created, like during 2020 and 2021, we created a huge value FOMO bubble, and then right now, if Nasdaq drop under 15%, and then actually keep correcting, then this bubble is going to pop entirely, and then all of these small cap stocks that getting over FOMO is going to drop back down. It's going to reach its true value, and it's going to go under a little bit more. And then we will have a period of time where it's basically trading dead zone for all these stocks, okay? Unless big institutional investors come in and then buy assets that they think is actually lower than market value. This is why Berkshire Hathaway is going to be a super great investment for those of you who just want to preserve value, because no matter what, they have about 60% on cash preserve, and then Warren Buffett's directive to his subordinate is, you gotta wait. You guys just wait it out. When you wait it out, and just keep buying back at the bottom. See you guys on the upside. Hope this video helps. If you wanna learn more in depth about the Nasdaq, where it's gonna go in, and you want to go back and check my credibility and look at my previous videos, of course you can. You just need to look at all these Nasdaq videos, and in a lot of those videos I highlighted what are I highlighted some short-term and some long-term prospects of Nasdaq. And then I always believe that the entire tech market is way overvalued, and I do believe that there's a list of garble stocks that just not gonna go anywhere. All right, see you guys on the upside. Like and subscribe.